to log on, but Civitas Strategies, we are so happy and honored to have been invited here by Taubman Burke because education on business structure is very, very important for small businesses. I'm Jen Bale. I'm the Director of Professional Learning at Civitas Strategies. I'm joined by Margaret Vivian, who's one of my team members. And hey, oh my goodness, Margaret, you are a
Senior associate.
Senior associate. I had that job too, and I couldn't even think of it. I'm so sorry. So Margaret is a senior associate with Civitas and is overseeing some of the work with Taubman Burke. And we're joined by Emily Getchell, who's our interpreter. So thanks to both of you right now. Hopefully we'll have some more folks joining us in a moment. So you've joined tonight to learn about the different types of business structure, the importance of choosing the right business structure, and depending, actually, regardless of whether you have a big business or a small business, business structure is absolutely crucial. And business structures can range from very, very simple to more complex. So we'll discuss some of the different business structures so that we can determine what business structure is right for your business. And you may, however, discover that the business structure you have right now is already perfect. So this is a great opportunity to figure out if you are on the right track that you would love to be on. So really quick, we're going to do our disclaimer. So the information that's contained here has been prepared by Civitas Strategies and is not intended to constitute legal, tax, or financial advice. The Civitas Strategies team has used reasonable efforts in collecting, preparing, and providing this information, but does not guarantee its accuracy, completeness, adequacy, or currency. The publication and distribution of this information are not intended to create, and receipt does not constitute an attorney-client or any other advisory relationship. Reproduction of this information and the recording of this content, including the use of AI, are expressly prohibited. So please keep in mind that only non-commercial uses of this work are permitted. All right. So before we get started, I would love if anyone who is here with us this evening put the type of business structure that you currently are in the chat, because I would love to hear. That would be sole proprietorship, partnership, single member LLC, S corporation, LLC electing to file as an S corporation. If let's just see if we have some answers. If we can learn more about LLC. Thank you, Priscilla. I appreciate it. And sole proprietorship, Daniel. So I think you both will find a lot of the information tonight very enlightening. Doesn't mean that you're going to want to switch, but at least you'll feel very confident in the business structure that you're in, or you'll be prepared to make a move if that's what you want to do. So thank you both there. So we do have a lot to cover tonight. Business structures, you'll be pretty much surprised that they're not difficult to understand, but it's important that you have the knowledge that we'll discuss tonight. So whether you have an established business or you're planning to launch your own business offering doula services, one of the most important decisions that you'll make is choosing the right business structure. The business structure that you select has both legal and tax implications, and that can significantly impact your business operations and your personal liability. So we always want to stress that. So to help you decide, this presentation is going to walk you through the difference between sole proprietorship, partnerships, corporations. We're going to go ahead and highlight the pros and cons of each structure, and we'll discuss what business structure is the right choice for your organization. So when we're thinking about business structure, basically the most common are sole proprietorships or corporations. You may, however, be thinking about forming a partnership. So we're going to discuss, we'll discuss that as well. The goal is really for you to have a very good understanding of the types of business structures and the benefits of each type of business structure. So just kind of keeping in mind that in a sole proprietorship, which we're going to go into in a little more depth, you and the business are considered to be the same legal entity, right? A key benefit of sole proprietors are that they can set up immediately. They don't need a formal registration process. If you're considering a partnership, that involves two or more people that share the ownership of a business. They are relatively inexpensive to establish when compared uh, to corporations, but they are a little more complex than a sole proprietorship. And when you form a corporation or an LLC, you basically then are creating that separate legal entity that is separate from you as an individual, right? So the business is separate from the personal. And establishing a corporation, LLC, S corporation, C corporation, does require going through an official incorporation process. And that's more time and paperwork and fees, although not that expensive, than a sole proprietorship or a partnership. So just keeping that in mind, we're going to cover each one of these structures independently. We'll take a look first at sole proprietorships. So sole proprietorship is, at the heart of it, the most basic business structure. That doesn't mean that it's not relevant or that it's not professional. It is the most inexpensive way and the simplest way to start a business. And that's why a lot of businesses start as sole proprietorships. All that's needed to establish a sole proprietorship is for a business owner, single business owner, to obtain the necessary licenses and permits surrounding the business, will say, obviously the doula business that you're in, to make sure you have all of that. But there's no filing as a sole proprietorship with any type of state government, any type of organization. You basically are a sole proprietorship, and you file. When you file for your taxes, you'll file as a sole proprietor there. Sole proprietorships are considered by the IRS to be self-employed. So you have complete control as a sole proprietor over your business decisions, right? You can operate under your own name. You may currently do that, or you can choose to create a business name, which we all know as DBA, doing business as. What we love about registering as a DBA is that it does allow you to open bank accounts and have contracts in the name of the business rather than your personal name. But keep in mind, just having a DBA does not separate liability. All right, so DBA is great in terms of, one, it can help you market your business. We love being able to do that. Not expensive to set up a DBA. Every state is a little different, but not complex at all. And once you've done that, you basically are establishing the identity of the business. However, it's still interwoven with your personal. So because a sole proprietorship is so easy to create, it really is, in many small businesses, the most popular business structure there. You could manage your finances for a sole proprietorship through your personal bank account, but we always recommend that you keep separate accounts for business and personal. And that's pretty much any account you can think of. If you if you have a DBA, I should say, if you have a DBA, opening accounts and everything in that name is really, really smart. Keeping the personal and the business finances separate does make a lot of sense there. It also helps you with more accurate bookkeeping, and accurate bookkeeping means, and record keeping means less hassle and work at tax time. That's what we all want. We want tax time to be easy for us. So do keep in mind, right, that since there's no legal distinction between you and the business, as a sole proprietorship, all of your business profits are reported on your personal 1040 form, income tax return. We're going to discuss how taxes work for sole proprietors in just a couple of slides. But what I'd like to do is to remind you, we saw we have some real benefits there, but I do want to remind you that as a sole proprietor, you have to think of yourself as you are the business and the business is you. There's no separation between a sole proprietor and the sole proprietorship and the business owner. Those hats, as well as the person behind all of that, are all interwoven, right? So in terms of liability, the business owner / sole proprietor, basically all of your personal assets can be at risk. So if you have any business debt, just as an example, your personal assets are not protected as a sole proprietorship. And if you were to default on a loan or have some legal situations, your actual personal assets, whether it be your money, your physical assets, sometimes your home, especially in the case of a lawsuit, if you don't have liability insurance, you could be personally responsible for that. You could lose some of your assets. So that's a negative with a sole proprietorship there. It does lead to honestly significant risk. And if there are accidents or incidents, um, having liability insurance is going to help you with some lawsuits, but as a sole proprietorship, a party can still come after you personally. So liability insurance is needed, right? Is necessary. I believe in New Jersey for doulas, you have to have liability insurance if you are going to be accepting Medicaid, working within the Medicaid system. But we would recommend liability insurance for everyone. Just keeping in mind, most of the time, your people are not going to sue you personally, but there would still be the possibility, right? I always want to protect your personal assets there. So liability insurance, having the right amount of liability insurance can help protect your business and your personal assets. But we really want to think about what we're going to talk in a moment about how we can even go beyond just liability insurance. Every business should have liability insurance. Chances are you would be covered. However, liability insurance often has limits based on what you were paying per month or per year. And if you were ever to be sued over those limits, you'd be personally responsible for it, because your personal assets could be exposed. So we just want to keep that in mind there. I have to say, in working with New Jersey doulas, I am always very impressed about the amount of liability insurance that you all seem to carry in general. And that's not the case with other small businesses that we work with. So that is definitely a positive, but we like to just kind of throw out there with sole proprietorship that there is some exposure, right? Now, oops, excuse me. When it comes to taxes, there is because sole proprietorships are not separate from a personal, you are the business is you. That means that you actually pay taxes. You pay taxes twice. First, you pay self-employment taxes, and that self-employment tax is 15.3%. What is that made up of? You're like, why do I pay that? Well, 12.4% of that is Social Security, and 2.9 is for Medicare, for the Medicare system there. So that means that you are required to pay 15.3% in taxes on your net earnings. And basically, that means that if you are not being paid via W-2, whether it's an employer or you paying yourself via W-2, really you are paying those taxes in full, the 15.3%. There's no offset. There's nobody offsetting that. And then what happens, that same number, that same net earnings that you paid the 15.3% on, that number transfers over to your personal taxes, to your 1040 form. So that's your personal income tax. So you are taxed at your personal income tax rate on those net earnings again. So basically, keep in mind that you're going to have all of your profit, all of your expenses, right? So all that profit is your total taxable income, all your total income, total revenue is what I should say. You remove those expenses, allowable business expenses, and boom, there's the net, the net profit that you are going to be paying both self-employment tax and you will be paying your personal income tax rate. So if you're not familiar with it, sole proprietorships are filed on what's called the Schedule C. And that Schedule C ends up being attached to your personal taxes. So you very, very much want to keep accurate records always, right? But it's really, really important that, especially for claiming expenses, have a great record keeping system available. make sure that you're on top of that so that you're not leaving any allowable expenses on the table. And at the same time, please make sure that you're accounting for all of the revenue, everything that would be included in revenue. You don't want to expose yourself to something like an audit, right? We want to be very, very cognizant, and that's the information that gets added to your Schedule C. If, as a sole proprietor, if you are, if it is how do I put this? If you are assuming that you're going to have a tax liability, that you're going to owe $1,000 in taxes, or have $1,000 in taxes or more in a year, you are required to file estimated quarterly estimated taxes. It is something that a lot of small businesses and sole proprietorships tend to overlook. Not difficult at all to do it. You can go to irs.gov. You can just put in the search estimated taxes, and it will walk you through. You can pay on the portal on the IRS website. Not difficult whatsoever. And the beauty of paying estimated taxes is that when tax time comes for that next year, tax season, most of the time you'll have paid almost your entire taxes if they've been figured out correctly. So paying estimated taxes is important. There are laws and penalties if you don't file estimated taxes there. So I do recommend, if you've never filed estimated, please consult with a tax professional. They'll help you through that process, get you started, and that way you'll know in the coming years how you would pay estimated taxes there. So and there can be credits available for doula businesses, tax credits, which have a lot of value even more than regular business expenses. So if you just want to jot down, speaking to a tax professional about available tax credits is also a really, really good idea. Let's talk about partnerships now. So partnerships are pretty simple, just like a sole proprietorship. It's a business in which two or more people share ownership. So each person has to contribute equally in terms of the investment of the business, and then each person shares the profits and losses of the organization in exactly the same way. So because of the nature of partnerships, they have shared governance, right? So there have to be very explicit written processes, rules that need to be followed by all partners. Obviously, we want to keep everybody right on the up and up there. So that is in place to make sure that disputes can be resolved, that profits are equally shared, and if there's a change of ownership, all of that needs to be there. Partnerships are also relatively inexpensive, but there is that shared liability between all partners, and some of the governance, meaning some of the management and the paperwork and the rules that you have to have written down to have a partnership. I like to remind everybody that while partnerships can be fantastic, please really think hard about who you're entering the partnership with. Make sure that you both are very, very transparent in your transactions, in your business plan. You really want to make sure that you're going into a partnership with a clear understanding of who you're going into business with, because all of the assets are split right down the middle, right? All the profit, but so are the debts. And all of the decisions that are made should be made by all partners, but sometimes that isn't always the case. So I do like to let people know that, hey, partnerships can be a rocky road. Just make sure you know who you're going to be working with in terms of your partnership, because it's pretty important. All right, now we're going to jump into a much larger category, which is corporations. So corporations are legal entities, right, that are separate from your personal world, your personal assets there. It's considered to be basically a separate corpus is what it's called, or a body. Sole proprietorship, right, we know that business is not separate in terms of taxes, liability, debt. But when you become a corporation, that's a legal entity that is separated from you as the owner. So there's a benefit right there, right? If you become a corporation, your personal assets are not at risk. Do want to keep everybody just remembering that being a corporation, you still need liability insurance. That does not, as a corporation for the business needs liability insurance. So if there were something to happen to the business, in the business, they cannot go after your personal assets of your corporation, but you could lose your business. So that's why liability insurance is very, very important. So having said that, right there, undoubtedly there are benefits to this legal separation, right, between the business and the business owners. But corporations do come with some additional effort, right, which actually are annual legal filings, separate tax returns. You often have to keep a very very detailed list of meetings, of notes for meetings, and there is paperwork and there is a cost involved for forming a corporation. But it's really great that liability, right, that your personal assets are separate there. And basically, what we're going to talk about, we're going to give you a rundown of the different types of corporations. And I'd like you to keep in mind that just because you are a corporation doesn't mean that there's a tax benefit. So LLCs, single member LLCs, have all that protection in terms of separate assets from personal and business, but they don't have a tax advantage. So I just always like to let people know, hey, as an LLC, lots of advantages, but they're not going to be tax advantages when compared to a sole proprietorship. Single member LLCs actually file exactly the same way as a sole proprietorship. So I apologize, that slide's a little weird. So there are basically 5 different types of corporations that you would most likely consider. We have nonprofits, C corporations, S corporations, and then limited liability companies, LLCs, right? Regular LLCs. And we'll start with nonprofits because that always basically, especially considering the wonderful mission of your work, nonprofits come to mind with a lot of individuals who are involving themselves with doula work and dedicating their lives to it. So I always like to start off with nonprofits. So they are charities, right? A nonprofit is a charity. It's considered to be a public serving company. It is not owned by an individual. So there are employees, director employees there. And then there's a board of directors who should not be employees, who should not include the director. So an independent board of directors, and their decisions are what lead the organization. So nonprofits can be difficult to manage from day to day because everything needs to be decided by that board of directors. So if you are a director of whatever the title may be of your nonprofit, making decisions have to go through that board of directors. So, and again, directors should not be sitting, anyone organizing the nonprofit should not be sitting on the board of directors. Anyone within the standard world of employees, of the employees that work for the organization, should not be on the board of directors. I also like to remind everybody that nonprofits, right, you are allowed to generate a profit in the fact that you're allowed to have savings, you're allowed to have a reserve fund. But the nonprofit structure, because there are tax advantages, the IRS does not expect nonprofits to hold on to excessive profit. In theory, because of the tax advantages, other than having a bit of an emergency fund or planning for future opportunities, changes, basically what comes in should be going out. So the money should be devoted to the mission of the nonprofit. Makes a lot of sense there. So the IRS is looking to make sure that the majority of funds that were brought in are not left, right? So we just want to keep that in mind there. Now, positive absolutely is that nonprofits are typically exempt from most federal, state, local taxes. You may be eligible for some grants that you may not be eligible for if you're a corporation or a sole proprietorship. So you have to keep that in mind. There are annual filings that you have to make with the IRS. So you could run the risk of losing your nonprofit status if you're not keeping up with the filings that are required by the IRS as a nonprofit. So it's not as if we get to just wash our hands of the IRS. There's still contact that has to be made there. I also just like to have people keep in mind that when you form a nonprofit, you do not own a business, right? So if you were to retire or you were to leave, there's no financial gain from having done so unless the board of directors were to offer you a severance. Let's say they had a package. There was something that if you were retiring, there was a lump sum that they were going to be giving you that is along the lines of what the IRS allows. So I have people that will talk to me about wanting, the great mission in mind. They want to start a nonprofit. I just like to remind them, hey, just keep in mind, you don't own that. So you have a business right now and you want to form a nonprofit. When you retire, your business could potentially be sold. It has a dollar amount that's tied to you, a value tied to you. That's not the case with a nonprofit. I just throw that out there. That's not to discourage anyone from becoming a nonprofit. So many benefits. I just always want to make sure that people understand that they don't own a nonprofit. You work in a nonprofit, you work towards the mission, you follow the guidance of the board of directors, and at the end of the day, you don't own anything there. There's also a situation in which you can have a nonprofit and a for-profit business can be run under the nonprofit. So a corporation, an LLC, could be run basically within the nonprofit. Please, if you've heard about it, if you're thinking about it, please speak to a tax professional. That for-profit business has to be in line with the mission that you have for the nonprofit, just keeping that in mind. And that means that if the business, for-profit business and the nonprofit are not aligned, you risk actually losing nonprofit status. So I just put that out there just so everybody knows. Great opportunity to speak with a tax preparer. So C corporations, we're not going to go crazy talking about C corporations tonight. They are usually the large, super large companies that you hear about are C corporations. They're owned by shareholders. It's very easy for really large enterprises because ownership can be transferred through shares. They're very complex in terms of all the legal, of the filing. They're expensive, and they are subject to double taxation. So taxes are high and far more than the next business structure that we'll look at. These are not common in doula businesses, and they are not common in small businesses in general. It's usually these very large entities. Now, the IRS I should say the federal government, we should say, the federal government, in response to C corporations being so difficult, what did they do? They created what's called an S corporation. And S corporations, if anyone is familiar with an S corporation, there's a really nice tax advantage that we're going to start to get into next. So again, S corporation, just like an LLC, separate legal entity. But unlike a single member LLC, you have this reduced taxes. You have a way to reduce taxes there. So that is very attractive. You would be paying yourself as the owner, which is basically considered to be you are a shareholder as the owner. You would basically be paying yourself. You'd have to pay yourself via W-2 wages, and I'll explain to you in a moment how the rest of the profit transfers over to your personal tax return without you paying the 15.3% self-employment tax. What is very nice in the United States is that you actually can be an LLC and you can elect to file as an S corporation without having to become an S corporation. S corporations can be a little more expensive to start up, more paperwork, little more details with an S corporation, but you as a single member LLC, you do have the ability to declare to file as an S corporation. So as I talk about what S corporations, what's available and the tax tax benefits, keep in mind that's the same thing for an LLC that decides to declare to file as an S corporation. Absolutely fantastic way that that works. So in order to be an S corporation, paying yourself, you must pay yourself via W-2 what's considered to be called a reasonable salary. That reasonable salary, the business is going to be paying payroll taxes, right? They're going to be paying the same 15.3%. But on the wages that you're paying yourself via your W-2, right? The wages, the payroll taxes that you are, let me just go back there. Basically, what I want to say is that the company would be paying the payroll taxes based on your reasonable salary, and the rest of the profit can transfer over. A reasonable salary, you don't just get to make up any number, all right? So if you think about the total compensation for a business, 30 to 50% of that total, basically total profit, you have to pay yourself via W-2 wages between that 30 and 50%. And then what comes after that transfers over to your personal tax return and bypasses the 15.3% self-employment tax that a single member LLC or a sole proprietorship pays. So just keeping that in mind. How do you decide what that 30 to 50% is? You think about the types of duties that you do. It does not have to be a business owner. If the majority of what you do is doula work and business owners in your area are paid more than doulas, you can base that reasonable salary on what doulas are making. So why do we have to do that? We've got to do it so that we are not just bypassing that 15.3% payroll tax altogether. The IRS is very, very specific about this. And you do, if you are an S corporation or an LLC electing to file as an S corporation, you must pay yourself this reasonable salary via W-2 wages. So I'm going to show you what the benefit of that, what that is. So with S corporations and taxes, there is that advantage, right, over a sole proprietorship. So LLCs are going to pay the payroll taxes. Their reasonable salary is going to then payroll taxes on the reasonable salary, and then the rest is going to transfer to the 1040. So basically what happens is the profit on that becomes regular ordinary income. So let's look at an example here. So let's say that there's $30,000 in, we'll say, pay. With a sole proprietorship, that's $30,000 on line 31 of the Schedule C. Basically, you would then pay 15.3% self-employment taxes on that $30,000, and that $30,000 transfers over to your personal 1040. So in our example here, $30,000 in pay, well, 15.3% self-employment tax, that's $11,190. And then that money transfers back over, that 30,000, right, transfers over to your personal tax return. This is an example of a tax rate of 22%. What does that mean? Excuse me, I should say yes. So 22% is the total. Oh my goodness, as the total of the 11,190 is the 15.3% self-employment tax and the 22% income tax. $11,190 in taxes overall. If you are an S corporation or an LLC electing to file as an S corporation, if you have to pick a reasonable salary, right? And we said it needs to be between 30 and 50%, and you have to do some research on it. So we're showing an example here of $12,000 in reasonable salary. The business is paying 15.3% payroll taxes on that $12,000. However, the remaining 18,000 is transferring right over to your personal 1040, whatever your personal tax rate is. So if we use 22% as we did in the first example, as a LLC declaring to file as an S corporation or an S corporation, you're going to pay only $6,600 in taxes. There's a huge difference there. So a lot of people will say to me, well, why would I not automatically be an LLC filing as an S corporation? You do need to have enough profit to make it worthwhile because you have to show that you're paying yourself that reasonable salary via W-2. So just keeping that in mind, we're going to just advance over. I want this slide. So basically, what is the last thing? It is the single member LLC, the limited liability company. Limited liability companies are easy to set up. There's a lot of flexibility. That just an LLC in itself, that is the protection that is offered to keep your personal and your business assets separate and protect you in that way. When you become an LLC, you do have this filing and there is a little bit of cost, so it's different than a sole proprietorship there. But you do have that option if your profit is enough to file as an S corporation. So that LLC is pretty darn flexible when you think about it there. A lot of businesses decide to start as a sole proprietorship, realize the exposure with the personal assets, become an LLC, but don't realize that as a single member LLC, the taxes are exactly the same as a sole proprietorship. So just becoming an LLC does not allow you to have any tax advantage there. But as we put down here, there are all sorts of different corporation taxation. When we talk about LLCs, we're talking about they could declare to pay as a file as a C corporation. We don't want that because C corporations, as we talked about, are huge entities that pay double taxation. We don't want that. The S corporation, that's pretty good if we can pay ourselves that reasonable salary. That is absolutely fantastic. The sole proprietorship basically handled the same way as a partnership, except for the tax forms, in the fact that there's going to be a self-employment tax, and then things are going to transfer over to your personal tax return. So when a business decides to become an LLC, that's where they make the decision that they're going to either file as a single member LLC, or they will be a single member LLC or an LLC that declares to file as an S corporation. So just keep in mind, an LLC though does protect your personal assets. You still need liability insurance because the business could be sued and you could lose the business. So just keeping all of that in mind. Single member LLC does not automatically offer tax advantages. It's when we hit that filing as an S corporation that we start to have tax advantages there. So let's talk about what is right for you. These are the standard questions that you ask. Am I new to my business? Do I have plans to stay? And this says childcare, apologize. Do you have plans to stay within the doula world for at least 2 years? And are you making $15,000 or more in profit? So these are the first 3 structures that rise to the top. Brand new business, often sole proprietorship. If you're stable, you're going to continue on that single member LLC. And then as soon as you have $15,000 or more in profit, the chances are being an LLC filing as an S corporation is going to be a benefit to you. So this is just a really quick recap, right? We said, hey, sole proprietorships, easy to set up and maintain. You do pay the 15.3% on every dollar of profit. Then you're taxed at the income tax. Best for brand new businesses and businesses that are, or people that are close to retirement. How do you become a sole proprietor? You get a very easy employer identification number, so EIN, super easy. You register with local government, with state government as needed, and you can either use your own name or you can become a DBA. That's really, really simple, right? Single member LLCs are easy to set up. There is expense, but not a heck of a lot there, but taxed as the same as a sole proprietorship, but we've got that liability. That's fantastic. But because it is taxed as the same as a sole proprietorship, 15.3% on the profit, and then that same profit, we pay our income tax, whatever our tax rate happens to be. I would say I have a little bit kind of a mixed opinion on this. doulas who plan to be in the field for at least 2 years, or if you're a sole proprietorship and you're very concerned about those personal assets, that's where I like an LLC. Right? So I like that there. Now, how do you become an LLC? You either can use an attorney or you can use an online service, because there is information that will have to be handled by an outside agency if you're not familiar with how it works. Is there money? Is there an expense? Absolutely. Just keep in mind that it's not a very large expense, and you would get an EIN number and you register with your local government. So not difficult at all in terms of an LLC. Now, an S corporation, or declaring to file as an S corporation, right? There's tax advantages there. There's the liability protection. The next two cons, I don't really think are cons. So need to set up as a corporation. Oh, you do that as an LLC. It's not that difficult. There is cost involved. There's paperwork there. You would most likely want legal advice, but it's not that difficult. Keeping your taxes separate and all of your record keeping separate. Well, as an LLC, you would want to do that. And we're always recommending record keeping being separate when you're a sole proprietorship even. So that's not a terrible burden. And again, we say, hey, best for doulas that have a net profit of $15,000 or more. So keeping that in mind. And you don't have to go through the whole filing process of it as an S corporation. If you're an LLC, you can elect to file as an S corporation. If you choose to do that, just keep in mind, you can't jump back and forth. You pick a business structure, you say, okay, I'm an LLC, I'm going to file as elect to file as an S corporation. You're going to do that for no less than 5 years before you switch, if you want to switch back or actually become an S corporation. So becoming an S corporation, there is a little more involvement, and it's one of the reasons why being an LLC, filing as an S corporation, is a beautiful thing. It's really an amazing advantage to have, that you don't have to become an S corporation to get the tax benefits of an S corporation. So how does it work? Not too different in the starting steps as a regular LLC. You create an LLC. We recommend that you have some assistance in doing so. You get the EIN, just like you do the other structures there. There you have to file the form 2553 to be treated. Basically, you have to file the form 2553 to be an S corporation or to be treated as an S corporation. But keep in mind, you're going to be paying yourself, whether you are an S corporation or choosing to file as an S corporation. You are going to have to pay yourself that reasonable salary through W-2 wages, right? So you are going to be setting yourself up to be paid through W-2 wages. That is not negotiable. You have to be paying yourself that reasonable salary between 30 to 50% of the overall compensation, and paying that 15.3% payroll tax. The IRS does not let you just take that profit and transfer the entire thing right over to your personal taxes. So there are record keeping requirements in S corporations. A lot of note taking, a lot of different things that have to be done. That professional, whether it's the attorney, an online service, they will walk you through what you need to do, how often you need to upkeep. So S corporations are more advanced than an LLC. But boy, if you're an LLC and you want to elect to file as an S corporation, that is a really nice thing there. So when you're thinking about setting up the LLC, you can hire the attorney. Keep in mind, expensive, but can provide some really great advice, very much state specific. Corporations are formed at the state level. So most attorneys in your state will absolutely understand. And there are attorneys that are just experienced in incorporating businesses, single member LLCs, S Corps, C Corps. They're very well versed. Is it expensive? It can be, right? You would always want to speak to an attorney and find out an estimate of how much you would be paying, how long it's going to take for them to guide you through the process of becoming a corporation. Right? Online services are definitely less expensive, but you don't have the same amount of guidance. We see here advice is an additional cost. There are services that help you create a corporation, and then there are add-ons. You need this kind of support, it's this amount of money. You need this kind of support, it's that amount of money. So just keeping that in mind. You can either way, if you're confident, if you've spoken to friends, if you've spoken to other doula businesses that have become incorporated, have corporations, the online service may be fine for you because people may have been really able to give you guidance. If you're starting from scratch, if you are just unsure of your circumstances, an attorney definitely could be the way to go. So keeping that in mind. So that is business structure there. So do we have any questions? I will say that if we have questions that we do not get to today, Margaret, do you mind just putting the Tom Copeland address, tomcopelandblog.com in there? We will answer doula questions. Yeah, so I was told, so we can take care of that there. But any questions? Anybody want to come off mute? We'll stop sharing so I can see everybody. We have anything? I know we don't have a huge audience, but I did see in the very beginning that Priscilla, you mentioned you were an LLC. Danielle, you mentioned that you were sole proprietorship. I hope that there's information here tonight that could help you with deciding if you're in the right business structure, if that's really working for you, or if you would consider, if you are a sole proprietor and you would consider potentially becoming a single member LLC. Just thinking about that. So we have the mention in the chat of a blog that Civitas Strategies that we oversee that actually is based for childcare providers. Civitas Strategies, most of our work is with childcare providers, and we're now working over the last year and a half with doulas in New Jersey, and we're working with other small businesses. So if you were to ask a question, there's a little option there that says ask the experts on the blog. Doula related businesses are more than welcome to ask questions. There's a lot of information there on the Tom Copeland blog, but it is geared towards childcare businesses. Most of it is geared towards childcare businesses. However, the tax information, the incorporation information is for all small businesses. So you certainly can get a lot of information there. So that's great, Danielle. In terms of deciding if you want to remain a sole proprietor or become an LLC, that legal protection as an LLC is usually what drives doulas and small business owners to become, file and become an LLC. You don't have to file as an S corporation, but that removal of personal or separation of personal business is a big deal. So that's definitely something there. So, well, thanks, Sylvia. Sylvia said good information. So I'm glad. Hopefully you have taken away something. You have the option to reach out through the tomcopelandblog.com. And then I know Margaret has some information to share with us about other work.
Yeah, I just want to take the last couple of minutes to shout out some of the other work that we're doing actively in New Jersey right now to support the doula community through the Advancing Doula Sustainability Initiative, which is this project that we've been working on with the Burke and Taub Foundations. We have started 2 sort of active initiatives that you can take part in. The first is a tax coaching opportunity. You have the opportunity to schedule a one-on-one coaching session, maybe with Jen, actually, to review previous year's return. She'll run through sort of a risk mitigation process that you can go through that will basically better inform you on how to file for the next year, avoiding any missed deductions or miscategorizations of deductions. You can find some real tax savings by participating in that opportunity. And we are also compensating you for your time in participating in that with a stipend. So if you do complete the survey, if you do go ahead and schedule a one-on-one tax coaching session, you will also be rewarded not only with your tax savings, but also with a $500 stipend for participating in that. So It's a wonderful opportunity. I'm going to put a link in the chat for where you can register for that. We do ask that you, or it is required that you complete a brief assessment before you schedule that session. And so you'll see that this link brings you to the assessment. It's a questionnaire that you'll fill out. You'll get added to our system. And then once you complete your assessment, we'll go ahead and schedule a time with one of our tax coaches, Jen being one of them. The other thing that we have actively going on right now is a business model study. So we are actively trying to learn more about your businesses, about how you operate, about what a successful doula business looks like, what sustainability looks like for doula businesses across New Jersey. And so if you're interested in sharing your experience, sharing your information, I'm going to drop our email for this work in the chat. Please reach out to us there and we'll get you set up. I recognize your name, Priscilla, and I believe Danielle as well, from participating in that already, and we appreciate your contributions. It's again stipend. We know how busy you are and how valuable your time is, and we want to make sure that we're honoring that by compensating you for that. And thank you, Sylvia, for being here. Sylvia is one of our wonderful co-designer committee members.
Nice.
We appreciate her contributions. It has really helped us shape a lot of this work thus far. And so we're grateful for you to be here tonight, also for taking advantage of some of these other opportunities to participate. Final shout out is for what's to come. There is a lot more happening with this project. In addition to just sort of this information collection that we're doing and these webinars, we are also going to be launching a site very soon, a website that is exclusively to support doula business owners. It's going to have a library of resources available to you. It's going to be sort of your hub to connect with our project team. We're going to have information about upcoming events like webinars, like some small study group coaching opportunities, maybe additional one-on-one coaching later this year as well. And like I said, a library of resources that will be available to you at all times. So if you have a midnight question about something, we probably have a tool about it that you can find on that site. So that's coming later in June. And we'll also be in touch pretty soon about another one of these webinar sessions to get you familiar with our team, the coaches that you might be interacting with as we continue this work moving forward. So lots of good things to come, lots of actionable things on their way. And we really hope to see your names, see your faces again in some of these upcoming events.